Hello there, guys. It's Sunday, July 18th. My name is Dave Coker, and this is Talking About Finance. Let's get an idea about what's going on in the markets. Once again, the usual setup is 7 slides for 7 days. Lately, I've been going to 8, and once again this week, we've got 8. Now, we'll open up, and just for background, this is what me and my buddies, all bankers, market participants, are talking about over the past week. Now, we'll open with one of my slides, one of my presentations, I should say, and you can tell my style, not just from the coker.me watermark there, but overall. Now, what I've got here is I've taken the global Dow, and it's an index like the Dow Jones 30 Industrial Stock Average, but it consists of 150 companies globally. And they're all blue chip companies selected by the editors of Wall Street Journal and other people. Now we can see that the global Dow is trading close to its record highs. At the bottom, I've got the Ridex bull bear ratio. And actually, I've taken the reciprocal. I've done 1 over it just to make sure that it moves in the direction that is most intuitive, because it tends to go from 0 to 100 otherwise, and it just doesn't work out well. So you can see, and when we take a look at the Ridex, what they're doing is it's actually a very clever index, and it doesn't get enough press as far as I'm concerned. They're taking all index funds, they're taking funds overall. So they're taking all the index funds that are long the market. So it could be sector funds as well. So we're looking at precious metals, government bonds, commodities. Basically, if it's long the market, it goes in the numerator. And then in the denominator, we've got essentially what they call bear funds. And there we've got money markets, of course, cash, as well as we've got all funds that are distinctly, intentionally short the market. So it's a really good indicator. Years ago when it came out, they only based it on a few funds, and it was very, very noisy. But they've continued to throw funds at it. I'm not sure the exact number, but it's a fairly interesting metric to look at it. Now, we can see that the Ridex bull-bear ratio is at record highs, without a doubt, guys. Even though I'm showing you the past 5 years here, you can go on stock charts and run it yourself. What's this say about the path of the market going forward? Well, it seems like everybody is bullish. And that should be concerning. As a boss of mine at Deutsche used to say, when everyone's thinking the same, no one's thinking. And this is concerning. I do admit over the past few months, I've been very bullish on stocks, and I've mentioned them a great deal. I mentioned that I've been buying. My situation's a little different, guys, because I'm only buying dividend payers, and most of them are higher yield. So I just want the cash. I just want the money so I can do other things. Although that being said, recently I've added some energy plays, primarily because what happened was when Bill's fund got beaten up, Bill Huang, when his fund Archegos got beaten up, there were some really good buys out there. So I grabbed Viacom and I grabbed ExxonMobil, things like that. So aside from that, everything is high yield. So I'm not really concerned about stock market overvaluation or perhaps a crash. But when it comes, because all liquidity and the way prices have been bid up, my gosh, it's going to be epic. It'll be a wonderful crash. In the crash, we're going to see these meme stocks getting pounded on. And this is interesting because it's looking at the meme stocks and a basket of meme stocks. I believe there's 23 in there. You'd have to go on Bloomberg and check it out yourself. They're down well over 20% since the peak. So what's driving it? Well, there's a lot of speculation about the underlying cause. Myself, I think there's 2 factors. First of all, the stimmies have all been spent in the States. There's no more money coming from the government, at least they're mitigating it. And at that point, the weather's getting better. People have less time on their hands. So they're getting out and going out and doing things. So instead of Robin Hooding, they're off there doing things. Now, we know some institutional money's gotten whacked really hard. Gabe Plotkin's, his Melvin Capital Management, got hit really hard because of this crash. Only a couple of these meme stocks in that basket are trending higher. I believe it's Newegg and Nokia are going higher. Now, I'm on Wall Street Bets a lot, guys, and I actually post there from time to time. You have to figure out my pseudonym because I ain't going to tell you, although it's all positive energy and things like that. But here's the point. They're still full on. I was reading it this morning. My gosh, I can't believe it. So, yeah, God bless them. They're good guys in many ways. Although, if you're listening, just take some money off the table from time to time. I don't believe some of these guys have put it all in and they just hold on no matter what. But watch it. I'm going to watch it. It's going to be interesting to figure out exactly what's going on with the meme stocks. They sort of are canaries in the coal mine in many ways for the extreme stock market valuations that we've seen. But what are you going to be doing with the money? Still, you got to figure out where you're going to be investing. And one of my buddies She sent this over. Now, she's very high up in IT at a big German bank I won't name, although I may have worked there before, so you can figure it out. Here's the thing. We all started talking about this when she sent it over. We're trying to slot names in. This shows you from the bottom up. It shows you, and what you want to focus on is the right-hand side, the light blue. It shows the applications that are in the cloud. So right now we're running about 23 of enterprise applications in the cloud by the end of the year 24. But the big one is by 2024, 37%. Now she told us, it was really cool because we were talking about this, and apparently all of their new development is cloud resident. In other words, banks seem to be giving up their own proprietary data centers because there's just been such advances in security and things like that. So now they can move this stuff into the cloud. The regulators bless it. That's the big barrier for a bank. So it's very fascinating to think about this, to plan ahead. So I never really recommend stocks, guys. I just don't do that. But if you take a look at the big players in there, and it's public knowledge, so just take a look at who they are. It's AWS. It's Microsoft with their Azure, and it's Google. They've got the biggest chunk of the market, and they'll probably benefit going forward. Another thing to keep in mind is that these vendors now, I worked in IT for, forever, right? And when we first started doing relational databases on Wall Street, we're going back to the early 90s, we got clipped. We didn't learn, and we were using Oracle, I'll be honest with you. And they have a lot of proprietary extensions, and when we wanted to migrate over to Sybase, because it was just faster, it cost us a lot of money. We just couldn't take our apps and roll them over because they were locked into Oracle. Now the point is, these institutions, and I know my friends is, they're going hybrid. So they're not putting all their eggs into the AWS basket and holding on to Amazon. They're actually going in with some two and sometimes three or more different providers. Different parts of the application lives in different clouds. It's really fascinating. So what you got to do is you got to put your money down and make your bets. And keep in mind, guys, I call it a bet, but you're really investing. And this is a really good one. This is I've been watching this for a while. My gosh, who's afraid of losing money anyways? Certainly not me. I do take risk, and it's only money, guys. I've lost a lot of money in the markets. I lost a six-figure sum in the Corona crash. It was my own fault. I learned from it, and I made it all back since and then some. But the point is, this is really interesting. If you're investing, then why are you afraid? I don't know. Maybe they're all buying meme stocks. What they do. This is off CNN money, and I think I might not look at them for politics, but I'm very open-minded when it comes to money. I look at all different sources, and this is wild, guys. Now, they consider, when they construct this, you can go look at their website, just Google it up and find it. They look at 7 different factors. So just off the top of my head, junk bond yields, market momentum, market volatility, safe haven demand, puts and call options, the ratio, the so-called VIX, and we're familiar with that from, stock price strength and stock price breadth. They put it all together. Now, the key thing is, you can see here, 1 month ago, it was neutral. 1 week ago, fear, but 37. Now it's down to 29 at the previous close and trading at 23. My gosh, at this rate, we're going to be back to the March 2020 lows in roughly 1 month. And those were trading, if you took a look at it back then, it was trading at 8. And people were afraid back then. No one knew how things were going to work, right? So it's interesting when you think about these things. Now, how can you protect yourself? Well, you sort of want to be doing the opposite of what the mob is doing. And as I mentioned to you guys, I've been buying stocks pretty regularly. I'm about tapped out now. I had a bunch of liquidity that I put to work in the States. And even though I get monthly cash flow, and I'm pretty good about reinvesting that in additional dividend paying stocks, I have some stuff in my property business over here. So I'll be bringing the money over and expanding that part of my own business. So I won't be buying stocks, but I wish I could, because I think there's some good deals out there, especially when people get afraid and they start dumping. It's really wild. But regardless, when you invest, you really want to buy quality. And that's something to do, to think about the names you're buying and have a good story behind the stock when you buy it. Here's a good one. Another friend sent over, and I don't know where she got it from. I didn't ask, but Apple is part of the S&P 500. Of course, the S&P 500 is a market capitalization weighted index of 500 stocks. There you go. And check this out. Apple's gotten so huge in market cap, it's now worth as much as the next 170 companies or 170 companies that comprise the S&P 500. This means a couple things. First of all, obviously, Apple's an extremely valuable company, but beyond that, it's got a disproportionate influence on the S&P 500. So if Apple missteps, which they do from time to time, they're hitting it really good these days, though, guys. Products are excellent that we're seeing, and I've got myself a new MacBook Air M1 with the M1 chip, and it's stoking. It outperforms my iMac that I got about a year ago. It's absolutely incredible what they're building these days. But if Apple has an issue, it will whack the S&P 500 to a disproportionate extent. It's an awesome company, and I've been a member of the Mac tribe since the 1980s. So when I got my first Mac, I could just see that GUIs were the future. And as we said, Apple's a wonderfully valuable company, market cap 2.42 trillion, all the world's unicorns, worth 2.37 trillion. You might wonder how many they are. I can tell you. There are 762 unicorns globally, and it just shows the power of Apple's franchise and the way they can sort of mint money. It's really wild what's going on. Oh, and here's a good one, guys. When we're taking a look at cars, they ain't making cars like they used to, or even just a few months ago, to be honest with you. Now, apologies, I should have expanded that chart. I don't know what happened there. But this is all down to chip shortages. But the thing to keep in mind is it's becoming a drag on U.S. industrial output, industrial production. And what can the U.S. do? Well, not really much. Mr. Biden's spoken about it, I believe, twice. I'd have to go back and look. He can appoint all the panels he wants. He can do anything he wants. It ain't going to change anything. The market is the only thing that will fix this, right? Market forces will have to adjust. Then chips will become plentiful again. Key thing to keep in mind is that this doesn't happen overnight. It does take time. Oh, and finally, you just know we're going to talk about Bitcoin. Yeah, I'm still at my Friday thing, guys. I'm buying Bitcoin once a week on Fridays. I've got a new thing, though. In the past, when I went through my first 4-year period of buying Bitcoin, it was every Friday night. So I'd meet the wife up in the city of London someplace. We'd go out and have dinner. And after I had a couple glasses of wine, I'd come home and buy Bitcoin, right? Now, I just have started doing it Friday mornings. It's really wild, about 5 a.m., 6 a.m., London time on a Friday. The mempool, as we call it, the outstanding transactions, the pool of outstanding transactions that have to be confirmed is really small, really low, and they fly. I've been doing purchases, and from the time I push the money from my bank over to the provider I'm using these days, because I'm not doing peer-to-peer anymore, I'm going through an exchange. When I buy on the exchange and push the money back to my non-custodial wallet, it's taking 2 to 3 minutes. It's really wild how fast it is these days compared to when I used to buy at night. I remember some of those transactions would go on 2 hours. It depends, especially back in 2017, 2018, when there was a real mania and we saw Bitcoin doing its first run up to about $20,000. Yeah, it would take a couple hours sometimes for these transactions to clear up. Now, what this is showing here, this is an interesting one. What we're seeing here, guys, is that we're seeing that the miners have started to accumulate Bitcoin again. And this could be considered a bullish signal. Some people are considering it a sign of a bottom in the market. I don't really get into that. I just tend to buy at regular intervals, which now is every Friday. And when I stop, I'll likely tell you guys I've stopped. I consider Bitcoin a long-term investment. My holding period for Bitcoin is forever. I never really, I did sell a small amount just to test the exchange I'm using and to make sure I could sell if I wanted to. And it all works and everything's fine there. So I'm not really that concerned about what the miners are up to. My holding period for Bitcoin, and yours, by the way, is forever. And remember, we've talked about this enough in the past. Only 21 million Bitcoin will ever be mined, and we're rapidly approaching where there's 19 million Bitcoin. And the only thing that matters, guys, is how much Bitcoin you have. Just keep buying it regularly. Put small amounts in. Don't pile all your money in at once. That's exactly what I'm doing. Relatively small amounts, buying, holding forever. And you might have something to really get excited about in a few years. We'll have to see what happens. All right, guys, that's it for this week. Thank you very much for your time. Remember, check out the markets. Do your purchases, have a story, have a reason why you're buying a stock, and then just ignore the noise. Ignore all the short-term stuff that goes on. Ignore people like me, especially me, right? Yeah, just do that. Do your own thing, and don't worry about it. The markets, as JP Morgan famously said, the markets will fluctuate. And we do expect to see volatility pick up and maybe get really out of control for a while. It's just the markets are too imbalanced right now. But have a wonderful week. If you're in the markets, you're going to be making money. If you're not in the markets, get in the markets. Buy something. Make some money. Take care.